Welcome to this overview of issues confronting accountants and small medium enterprises in the last week or so. I'm Peter Towers, Managing Director of ESS BIZTOOLS. At ESS BIZTOOLS, we have been examining the process that occurs with a business that's undertaking an investment-ready status. This is what occurs when a decision has been made to get the business investment ready, to be able to try to raise some capital. It's just not a matter of talking to someone and trying to raise capital under Section 708 of the Corporations Act, nor is it possible just to make a phone call to a crowdsourced funding intermediary and say, I want to raise $2 million for my company. Or even a small company that's been undertaking some research and development that has heard about the early stage innovation company. And I only wish a lot more people and accountants had heard of the early stage innovation company. But we'll talk about that more at a later time. But they just cannot decide they're going to raise money and go out and raise it, because there needs to be an achievement of an investment-ready status. So what's included in that? The first component is the business plan. And the business plan shouldn't be out of a textbook and shouldn't be the same as you prepared for another client last month, even if it's very similar business. It should be tailored to suit the specific circumstances of this business, which in most cases, of course, if they're going to be trying to raise capital, will be a company. So I'll refer to companies from now on in our conversation. The business plan should be a joint effort between you, with your role being the chairperson of the process, and the chief scribe. But you need to sit down with the leadership team and work your way through all activities being undertaken. At times you need to play the devil's advocate. You need to pose questions. You need to encourage the leadership team to have some debate. But it's very important that they have this intimate involvement in the preparation of the business plan, because they are the key people that are going to be entrusted with the responsibility of implementing the business plan. And that's why it's so important. Part of that process is a due diligence review. Think about what you know about your clients at present, the ones that may be interested in going down an investment-ready status process. In most cases, you only know them because you prepare an annual set of accounts and an income tax return. But what do you really know about their business? Have you been to their premises? Have you analysed their leadership team? Have you looked at their internal processes? What information is being produced daily, weekly, monthly? Who are their customers? What information do they receive from their customers when they open an account? Are they aware of the Personal Property Securities Register and the requirements if they wish to register someone on that register? And why would they do so? Is there a written system for the person that's in charge of debtors, for that person to follow and to implement? Or is it just some stick-on notes on the side of a computer or a filing cabinet? They're hand-me-downs from the previous person who had this responsibility. And one observation I will make is that I do notice in lots of businesses when I go to them that the person responsible for debtors is a very recent engagement person. So it's a job that no one likes doing. Part of the reason is because there's no appropriate training. There's no system that's been written. within ESS BIZTOOLS, we do have a system and we do recommend training. And we recommend that you undertake a full review of their debtors system every 12 months. Because what you might find is the person you trained a year ago is no longer doing that job. The person may have been promoted or may have left to go to some other job. And there's someone else in there that's really got no idea what's going on and doesn't know the necessity to be indicating due date for payment on tax invoices. Who doesn't know the necessity for making follow-up phone calls, especially for big payments that are due 3 or 4 days before the due date, just to give them a subtle reminder that the payment's due. So the key issue I want to talk to you today about then is predictive financial accounts. These are the budgets and cash flow forecasts, but they need to be done in detail so that meaningful information is being prepared. It all starts with a budget for each operation. If you've got a client that's got 3 or 4 separate activities, it might be a warehouse, it might be a delivery section, transport, it might be a retail outlet, could be the office, administration. I don't think we should put them all in one profit and loss account. We should split them up, because unless you dissect these activities, you will not get true financial data, business metrics and KPIs that you can use to help your client run a better business. And in fact, there can be a problem in one of those activities, and it can be difficult to isolate where it is unless you have fragmented the business in the profit and loss accounts. At the end of the year or any time during the year, if you want a consolidated profit and loss account prepared, that's simple. Just consolidate. And you've got that information. But for month-to-month operational, I really believe you should be dissecting it into the various business components. And you should also do that in the budgets, obviously, so that we can compare the actual results against the budgeted results for that operation. We also have the key drivers. Now, some people don't create key drivers, which is a debtor sub-account, a creditor sub-account, and you may have prompt creditors as distinct for 30-day payment creditors, because more and more suppliers are putting businesses, especially newer businesses, on fairly short payment terms, even cash on order or cash on delivery, or payment within 7 days or 14 days. I think in those cases you probably need to be budgeting so that you can look at that component separately, because it's very important that those payments are made in that 7 or 14-day period. Otherwise, supply will be cut. And then where is your client's business going then? The other key items in the key drivers are capital expenditure and research and development. By bringing it out of the just normal payments and expenditure items, you're highlighting it so that it can be evaluated more closely than what it will be if it's basically hidden within the overall process. The cash flow forecast, of course, brings to account the payments out of the various sections, out of the budget, out of the key drivers, and in some cases out of the balance sheet area. That needs to be analysed, and you need to play the devil's advocate again a bit there to say, well, what happens if our debtors slow down, if the budget is for the payments to be made on, say, a 40-day basis? It's a good idea to do a worst case scenario, let's say 50 or 55 days, depending on the history of the business. And what's the cash position then? Will the business have enough cash in the bank, or does there need to be a contingency plan being developed? That's why you're doing this work, to help the forward planning, to help the forward thinking. So it's not a matter of ringing the client at 11 o'clock on a Friday and saying, oh, we haven't got enough money to make payroll. What do we do? The projected balance sheet's a very important document. Not only is it prepared so that you make sure the whole process of budgets has balanced, but you're preparing it so that you can articulate to your client. You can be the storyteller to show them what their financial position will be in 12 months, 2 years, 3 years, 5 years' time, whatever time frame they're happy to have the whole predictive accounting process cover. So you can sit down and talk to your client and say, well, after 5 years with the long hours, the stress and the worry, and probably not too many holidays, would you be happy if this was the position? The client can look back and say yes or no. And part of this process may well have been that you've looked at a business valuation. You may have wanted to upgrade the valuation of the business because of the improvements that have been made. So the client can say, yeah, I'm happy with that, so that the leadership team can know clearly that is the target. This is how we're going to run the business to achieve this overall result. Next time we talk, I will talk more about where you might be able to head to on this investment ready status. And just as a final comment, this type of planning not only applies to companies, and it does apply to sole traders or partnerships, but it also most definitely applies to charities, not-for-profit, sporting organisations and churches. And I've been involved in all of those types of organisations, and they all need this forward planning of where they're going. The Export Market Development Grant application for round 4 opening date has been announced by Austrade. It's Tuesday the 12th of November 2024. So if you've got clients who are exporting or proposing to export or offering services to overseas residents when they come to Australia, so this might be whitewater rafting or cruises on the Barrier Reef or going out to the Red Centre, that where activities are supplied to tourists, international tourists, your client might be interested in applying for a export market development grant. Now, these apply to any type of entity. A lot of the government grants can only be taken up by companies, but the export market development grant can be taken up by any type of business entity as long as it's Australian based. And we've got more details in our material, which is available for our subscribers on our website. The upper limit turnover is $20 million, but there's also minimum turnovers for the 3 tiers of this program. So tier 1 is for people who are ready to export but have not previously exported. Tier 2 is the applicant is already exporting, but they want to expand their marketing and promotional activities within those existing markets. And tier 3 is the applicant is already exporting or promoting eligible products and is seeking to expand their export promotion activities and make a strategic shift in the marketing or promotion of eligible products in a foreign country. And the minimum turnovers that are required is tier 1, $100,000. For a tier 2 application, the turnover has to be $500,000. And for a tier 3, the turnover has to be $1 million. There's also minimum grants and maximum grants that apply to each of those tiers. Tier 1, the minimum grant is $20,000. The maximum grant is $30,000 per financial year. In Tier 2, the minimum grant is $20,000, but the maximum grant is $50,000 in the financial year. And in Tier 3, the minimum grant is $20,000 and the maximum grant amount for the financial year is $80,000. So there's a fair bit of money available. Just remember that your clients have to match the contribution coming from the government via Austrade. So they need to have the wherewithal. They prepared their budgets and their cash flow forecasts. They know they've got this spare money allocated in their budgets that they can clearly identify to Austrade that this amount is available to assist them to undertake their share of the funding. The next item I want to discuss is the Industry Growth Program. Now, this program is the federal government's replacement to the Accelerating Commercialisation Grant, which I was involved with as a consultant when it first commenced back in 2012. The Industry Growth Program has been a little bit slow getting action underway, but they've finally done so, and they've announced that they've been handing out grant funds, $4.3 million to support a fully automated hyper-fermentation technology to make food, animal feed, fibre and fuel. You've got clients interested in doing that. $1.7 million was allocated to support a business for its high tolerance lithium foil battery manufacturing process. $231,000 for a software tool which can remove malicious content from the internet. And $157,000 allocated to a company for the development of its robotic blueberry picking device. So what these 4 grants show you is that it's a wide variety of grants being offered by the Australian government. And that activity is now available, and I would suggest that you have a look at it. And obviously ESS BIZTOOLS has got full product packages on this grant and a whole range of other major government grants that are available to our subscribers. So if you would like to view some of our processes and hopefully decide to become a subscriber, that would be great. Another new component that we've introduced in ESS BIZTOOLS is trying to demystify research and development. In our most recent package, which is the advisory intro package, which is targeted at small accountants and bookkeeping firms, we've introduced a research and development introductory package, which gives a brief overview. What we're trying to achieve is that if you are one of those accountants that you've not previously been involved in advisory services and you're wanting to get started, or you're a bookkeeping firm that's wanting to offer a broader range of services, and the client comes in and sits down with you and says in the conversation, I'm thinking of doing some research, and I've heard there's a thing called the Research and Development Grant Incentive. How does it apply? Can you give me a rundown? We don't want you to be in the position of saying, I don't know anything about that, or I know you'll have to talk to someone else. We've given you enough information that you can say, well, you've got to be a company, so we'll have to move you across to a company, because the client might currently be a sole trader. And they won't be able to claim the additional benefits unless they're a company. And they need to spend $20,000 in the financial year. Now, that's not just on one project. That can be on a dozen projects. Doesn't matter. They need to understand that they need to keep records, and they need to go through a process of lodging a return each year, which has to be lodged 10 months within 10 months of the end of the financial year, which for 30 June financial year ends is the 30th of April the following year, which goes to Oz Industry, who assess whether the project's been undertaken were actually research and development. So we've developed this introductory package so that you can answer those questions. When you bring it up on your screen, oh, research and development, yes, you can take your way through. And then you then give your client a printout on that introductory material and a flowchart that we've prepared, which explains in boxes and arrows and just how the process works. So the client says, geez, that's great service. Now, then you probably need to make a decision. If the client turns around and says, well, I want to proceed on all that, I'm going to go and get a company and I'm going to move what I've been doing on research and development into that company activity, and I want you to give me further advice. What have I got to do next? Now, you might then want to make a decision. You might say, well, unfortunately, we don't offer advice on research and development. We gave you that preliminary advice so that you knew what it was about, just like going to a GP. But you might then say, we need to refer you to someone else that has more knowledge on research and development. Now, that could be the client's accountant, of course, if you're a bookkeeper. If you're already an accounting firm, you can do some searching on the internet and find an accountant that does offer research and development services. If you can't find anyone, you could contact me at ESS BIZTOOLS, because we've got accounting firms as clients and bookkeeping firms all over Australia, and we could nominate someone that you might be confident then to refer your client to. The important thing is, though, we want to give you the tools so that you're engaged in this process, so that you can at least give the client that initial response to their question, or give them that initial advice so they know where they're going. If you have any questions on any of the matters that I've raised in this discussion on products and services that are applicable to SMEs, that I honestly believe accountants and bookkeepers should have familiarity with, so that you can give advice to your clients, please don't hesitate to contact me. You can send me an email, peter@essbiztools.com.au, or you could send me or make a telephone call, 0747241118. And obviously, all of our information packages, summaries, are displayed on our website, www.essbiztools.com.au. We would love to hear from you, and more particularly, we would love for your firm to become a subscriber member to ESS BizTools. Stay safe. Have a great day. Goodbye.